Today, I want to go over the real meat of the matter, the real way that we put on all of our SPX DTE, zero DTE trades. So I'm going to start off with what we do every single week, how we figure out what we're going to put on, how we back test it, and then how we build the automation tool. Hopefully I get it done in about 20 minutes, but let's take a look-see here. First of all, I want to mute my computer because we are in the trading day and it will make a lot of noise. I do about 120 to 150 SPX trades a day, which computes to about 30,000 of them every single year. What I do, first of all, is I take every week backtest every single weekend. So I start off by taking out what my net lick is. I run a program of NQs, which I do short puts on, and I hold 30% off to the side for that. Then I hold another 20% off to the side for just defense, just to be sure that I'm not using all my buying power. So I use about 40 to 50% of my buying power for the SPX. I know on my Qs it takes about 12,000 per Q, so I know how many Qs I can put on with the SPX. We're going to do 150 wides on our fund every single week. So those are going to be around 12,000 on average later in the day. Beginning of the day, it's 15,000. Later in the day, they get a little smaller because it never goes out to 150 wide. So once I do that, I figure out exactly how many SPX I can put in on that day. Typically, it's in the range of 120 to 150 right in there. So, and you're going to hear some trading in the background, I guess. I've got that on. I wish I could turn it down a little bit, but I don't think I will be able to. So at any rate, the next thing that I do is I find the top SPX trades of the, sorry about that. Top SPX trades of the particular week. Normally I look at the multiple entry iron condors, the exponential moving averages, the opening range breakouts. I look at reverse iron condors, and I look at double calendars. And that's what we'll be putting on our main fund other than the NQs. So what I'm going to do then is for each one of those, we're going to run a series of back tests. We back test every minute. There's 390 minutes in a day. And so we go back 6 months. Periodic, every quarterly, we'll go back 3, 6, 9, 12, 24, 18 months, just to make sure that 6 months is still the best time period. But based on our observation, it continues to be gives the best prediction of what's going to happen in the future. So once I do that, then we're going to take a look at, let's go per strategy. Let's just take the multiple entry iron condors, the MEX, for an example. What we're going to do is try and figure out what are the best ones to put on each particular week. And how we evaluate a trade is we look at the compound annual growth rate over 6 months. We assume $100,000 in an account for each one of these particular trades. And then, pardon me, we look at what the max drawdown is. If I was just a truly mechanical robot, I wouldn't really care about the max drawdown as long as it wasn't over 100%. But I'm a human being, and I know that I will have problems just dealing with myself and my family and everybody else if I get a 50% drawdown during the course of trading. So I look for some reasonable max drawdown. And then we use a MAR, in Options Omega, it's called a CalMAR. We use a MAR ratio, and then we put all that into AI and we massage a little bit and have some of our own independent numbers as well. So so what we got is we've got a multiple entry iron condor, and we're going to look at for 6 months, every single minute, which is about 82,000 trades per back test. And then what we're going to do is we're going to say we want different premiums. So we're going to start looking at premiums a little bit less than $1.75, $1.25, $1.50, and we're going to work our way all the way up to $4. So that's going to give you a lot of back tests. Remember, each one of these is 80,000. Then, pardon me, then we're going to look at stop losses, and we're going to start at 75% stop loss, 85, 95, 105, 125, and we're going to work our way all the way up to 400. Sometimes, and then at 400, we'll go 500, 600, 700 by hundreds. Again, every combination of these, so if you've got a combination of $1.50 with 300% stop loss, that's $82,000 back, 82,000 back tests. So it's a lot, right? And I often am fond of saying we do millions or 1 million or 3 million. I think it's more, someone on my staff was telling me it's like 7 million, but it's a big number. It's a lot of back tests, something you could not do without the, by the way, we use Options Omega for all of our back testing. We've used other programs. They're not as robust. They're not as detailed. They don't have the tick level stops. We like tick level stops because when you're trading, it's not just by the minute. The broker doesn't wait by the minute and then calculate it. They do it by tick, by tick, by tick. And so second by second. And so we want to be sure that we're getting legitimate data and that we understand what the real risks and rewards are. So, okay, we've got 6 months back, every minute of every trading day, which is going to be about 82,000 trades. Then we're going to times that by all the different premiums, and then we're going to combine that with all the different stop losses, right? And then we also do some massaging of the widths of them. Sometimes we're doing a 6 trade a day challenge, which I think as of today is up about 158% over 6 months, or it's 23% over 6 months, which is an annual rate of about 158%. And so we will do that as well. We do take a look at 100 wides. We just had our accountant was just in, opened up a new fund for us, and he didn't want to trade 150 wide, he wanted 100 wide, so we run those for him as well. So once we get all that done, then we look at all our different strategies, and we're going to have to run the same types of things for the opening range breakout, for the reverse iron condors, for the double calendars. I think we also run a naked put program it's a little bit different. That's on some of the smaller funds. They're more technology based. But at any rate, that's how we pick out those. That's how we do all those back tests. So then what do we do? So now we've got millions and millions of back tests. Options Omega spits it out into what's called a CSV file or an Excel file, but it's a comma separated value file. And so it's got, each one of these has got 82,000 trades on it. So now we need to take those trades and we need to have AI. We've created a whole bunch of scripts in AI. So, and just working with AI, it took us about a year, where we dump all this information into AI and we say, okay, give us a report, and it will do it test by test of every single minute of every single day. What is the profit or loss? What is the compound annual growth rate over that 6-month period? What is the max drawdown during that period? What are the consecutive wins, consecutive losses? Because you want to know, what that consecutive wins and losses can be. It determines how your compounding comes out. Then we use the either Calmar if you're using some of the other back testers, or it can be MAR if you're using Options Omega. And you figure out what that ratio is, and then we sort it by that ratio, understanding that we eliminate certain things that have significant max drawdown, just because we know as human beings we can't deal with that. And so now the other thing we're going to do then is we are going to take a look at, let's see what time it is, 3:57. So we're just about to the closing, and we're up about 21,000 today in our big fund, which is great for the. No, that's not the big fund. Oh, that's great. Wow. All right, good. Well, we're having great when you have a great day when you're on tape. It would have been bad, I would have said. It's, and by the way, it doesn't really matter up or down. I don't look at it. I don't watch the trades during the day. All I do is either lay out or go swimming or surfing, or now we've got a video channel. I'm working on the video channel. So, okay. So now we sort out all of our trades, and we sort them from top to bottom. We have a list of all the different strategies that we're using, all the different combinations of premium, stop loss, entry time, all those things, strategy, all those combinations. We sort it, and then what we do is I like to take at least the top 100, 120, and then sometimes 150, depending on where the natural breaks are. And we know what you see, that there's groups of them that are say that it's from the MAR is from 1 to 100, or from negative 100 to positive 100. And so you can see it starts at say 60, and then it'll work its way down to say 40, and then there won't be any until 30. So there's a natural break. And we call those the greens, just like a stoplight. Green, then yellow, and then red. We also have a brown for the super good. If you get ones that's super good, we'll do that. And so then what we do is we take that and we figure out what are the 120 that we want, what is the allocation we want. We go back and check our spreadsheet, make sure that we have enough capital. And if we don't, then we massage the numbers on how many contracts we're going to be selling for each one of these particular positions. And then we take that data and we go over into Options Omega. And now in Options Omega, you have to create all these strategies. So you can imagine it's thousands and thousands and thousands of strategies, because you're going to have, say, multiple entry iron condor, $1.20 spread on at 9:37, with 95% stop loss. And then the same thing with 125% stop loss, and the same thing with a 400% stop loss, or whatever the combination might be. And so you have to enter all those, and that there's no way to do that with AI that we've figured out yet how to do it. We just have to enter it manually. And I should say this whole process, it takes 14 to 16 hours of man hours or woman hours to do. We typically do it on the weekends. We used to do it monthly. What we found is that some of the numbers got a little aged. We know that there's our bell, and let's see what we did today. I hear Maria clapping upstairs. We're up 19,800. So that was a good day, and that's a smaller fund. So in the big fund, it's going to be 100,000-ish, about 5 times as big. So anyway, so what we want to do now is we want to take a look at how getting all those entered into it. And it's a big problem because you've got to take off last week's and then put next week's on. Now, about 80% of them will transition from one week to the next. And that makes sense, right? Because you're just cutting off 1 week at the end and adding 1 week at the beginning. Also, with our CPA that was here for 3 weeks, one of the new things we're doing is we're looking at the rise and fall of particular strategies. So let's say that you have a strategy. Every strategy we've discovered has seasonality. And so what we see is we see a strategy will start picking up steam and it gets better and better, and then it will roll off and not be as good. Probably due to the amoeba theory, because of the internet. A certain time, 11:51 used to be a super popular time about 6 months, 8 months ago. 11:02 was real popular. And those times then become, a lot of people go in and start doing those strategies. They go onto the Discords or to the YouTube channels and they say, oh, this is the great time. So they all pile into that time. And it's simple economics for anybody that's done economics. You know, if there's a lot of people that are selling premium at a specific time and a specific top stop loss, easier for you to say, then there are not enough buyers to keep the price up and the price goes down. So then it doesn't perform as well. And so then they're out looking for something else. And so what we want to do is stay ahead of the amoeba. We want to stay ahead of the group. There's a group think going on. And if you look at the CBOE and the information that they have, they'll tell you that most people are lazy. And so they are putting on their trades on the half hour. Then what happened is people started saying, oh, I'm going to be a little bit different. I'll go 2 minutes after them. Then they figured, oh, I'll go 2 minutes before them. And they're always chasing, right? They're always behind. We try and get out in front of it. Now, when you're done with all that and you get it all up and running, what do? Then we like to go Wednesday through Friday, we forward test. So what we do is we take what are the actual results that we've achieved, and now we're going to compare those to the back test, because you can perhaps have them entered wrong on options omega, your strategies. Perhaps you entered the back test incorrectly. Perhaps AI made a mistake. AI makes mistakes. There's a whole deal of, you have to do testing. And again, that's why we had our CPA in here, is to rigorously test our numbers to make sure that after doing all this data and collecting all this data, that the actual output, that it makes sense. All this effort really paid off. And it has. You know, we're at the 52 to 74% profit range, and that's without compounding. You start compounding on top of it, and it gets to be silly. But you have to be out in front of it. Again, this is entirely math-based. I was a gambler for 40 years. I never cared about sports. I didn't watch any sporting events, and I made millions of dollars. And the reason why is because I just used the mathematical formula. I know that 85% of the bettors, at least at that time, were betting on the favorite. 80% of the bettors were betting on the over. And so again, it's simple economics. Lots of people on the favorite and the over. I just bet on the under and the money line dog, and I got overpaid for the risk that I was taking. Likewise, we just want to move away from the crowd. It tends to be moving away from the crowd, and that back testing is going to reveal exactly where you should be and what you should be doing. So that's how we do our back testing. That's how we build our trades. And hopefully that is helpful to you. If you'd like to see more, we never ask for payment, just in the comments below. If you could just tell us other videos you'd like to see, we'd sure appreciate it. I hope you have a great trading day.